What does it mean when a company's story shifts from crisis of solvency to crisis of narrative? For DigiPlus in 2025, this was not just an accounting exercise. It was a reckoning for investors and analysts alike. At the headline level, DigiPlus appeared resilient. Revenue rose 12% to 84.2 billion pesos. EBITDA hovered at 14.2 billion pesos, and net income stayed steady around 12.6 billion pesos. Cash remained strong and debt modest, suggesting stability rather than distress. But markets judge more than numbers. They measure whether earnings can withstand shocks, whether growth is durable, scalable, and resistant to political risks. On that score, DigiPlus faltered in the fourth quarter. Revenue dropped 27%, EBITDA plunged 32%, and net income sank 36%, tracing back to regulatory actions that forced e-wallet providers to cut off in-app access to licensed gaming platforms. This disruption, first visible in the third quarter, proved lasting, not a temporary setback, but a structural shift for DigiPlus's online gaming model. The deeper concern lay in costs. Operating expenses surged 15% for the year. Advertising jumped, salaries climbed, and subscriptions soared well beyond revenue growth. In favorable times, such investments fuel expansion. When growth stalls, they reveal operating leverage in reverse, spending to stand still. This exposed the decline in earnings quality. Net profit margin edged down, and returns on equity and assets waned. DigiPlus was intact, but its ability to convert sales into reliable profit became weaker. The market responded by reassessing not the company's existence, but its vulnerability. What had once seemed a frictionless digital giant now appeared subject to regulatory friction and political scrutiny. Share prices reflected this reality. Despite remaining profitable and cash-rich, DigiPlus's valuation dropped sharply. Investors repriced risk, connecting share weakness to tightening online gambling rules, payment restrictions, and customer protections. Yet, management acted deliberately. DigiPlus diversified payment channels, expanded over-the-counter options, bolstered player protections, and approved a substantial share buyback. International diversification and offline gaming initiatives signaled strategic adaptation. For now, the challenge is clear. Recovery must occur within a more regulated, closely supervised environment. The next chapter isn't about surviving, but proving growth anew. If DigiPlus can deliver cleaner revenue and more efficient profit conversion, the pain of 2025 may become a stepping stone, not a lasting scar. High-growth stories rarely end with a bang. Often, they pivot on a quarter that reveals new truths. For DigiPlus, Q4 2025 was precisely that turning point.